Good afternoon from Germany, and it's heavy windy outside, also really windy. And yeah, maybe that's a little bit like a forecast for what's happening today at the stock exchanges. Strong head and tailwinds. You cannot predict from which side the wind is coming outside. Really heavy. I haven't seen this for years. And yeah, let's see if the same thing happens at the stock exchange today with consumer price index data. So we will have more economic data, especially inflation data, and therefore the markets will move today, probably move. We don't know if the number comes just in line what will happen, but we will have initial jobless claims like every Thursday, and we will have CPI. So let's right hop into and prepare for what we can see here. So today, yeah, of course, like my stream if you haven't done already. And we will start today with ES future, so the future for S&P 500. Normally I only trade Nasdaq, but because I heard that a lot of you are trading SPY, the ETF for S&P 500. Therefore, let's have a look at ES future. I have drawn a Fibonacci. We were talking about Fibonacci yesterday on Discord, and therefore I will show you here my Fibonacci levels for ES. We went above the 50 Fibonacci yesterday, as you can see, and we are touching right now the 4,000 points level. And on ES future, that's an important psychological level. The next level to the upside here would be the 4,030 points level. This is the 61.8% Fibonacci retracement. As you can see, it was a previous close here on December 14th, so this could be a potential level to the upside. It's about 0.6% to the upside here for ES. To the downside, next level would be the closing of the day before yesterday. Here you can see the level is 3,940 points, and this would be the 38.2% Fibonacci level. So this could be a potential target to the downside, and this would be 1.7% array right now. But as you can see on a day chart, we are in an uptrend. The fourth consecutive day now here with parabolic SAR indicating an uptrend, because here last Friday we closed above parabolic SAR. The same in Nasdaq. So let's move to Nasdaq here. Almost the same, but you see that we retested the lows last Friday. So Nasdaq is a little bit weaker than S&P 500, but was a little bit stronger the previous days. But we need one more day maybe, or one more movement today to go above the 50% Fibonacci retracement here. This was a previous low, as you can see, though it is an important resistance level right here at the 11,534 point level. This was previous low and the 50% Fibonacci level. But because we are so near to this level, I think that if we see lower than expected CPI data, we will probably be right above this level here, and then see the next target here, 11,700 points. This was previous low point here, 11,728 points. This is my target to the upside, where I want to close my long positions. I still have a small long position in M&Q futures, only a light position for my portfolio size, but I want to play direction here. And yes, numbers can be worse than expected, higher than expected, and therefore Nasdaq can drop. But I think that we will soon see a reversal here if we drop, because we are now above the moving averages here, and we need to go to higher levels to see the max pain point before we can go lower again. But a lot of people ask me why I'm bullish. I'm just bullish because we see here these strong green candles here, and again parabolic SAR is here below the chart indicating an uptrend. We had the crossing here, as you can see, last Friday, and now it's indicating an uptrend on a day chart. That's good, but we are still in the sideways trading phase here. And yeah, I'm not so bullish for the first half of 2023. I would be bearish, because I think that the recession will be worse than expected, and therefore we will have more economic data that is worse than expected, and then the market will drop again, but not in the first 2 weeks of January. And that's why I'm still bullish right now, just to see a push to the upside and to push out the early bears who took a short position too early. and expected that we will drop here below right away. And therefore we can push here, we can push even higher, but I want to be out of my long position right here, and then I wait for the push to the downside to take on more short positions and to be bearish again. But yeah, maybe not too early. Like last time I was a little bit too bullish in December, hoping for a Christmas rally or Santa rally. Didn't happen. And yeah, so this time I will stay out of a short position and not be in one too early to predict it, just waiting for more confirmation to come. But for now I'm in a light long position. I will hold over CPI. Let's see the expectation for CPI. I will bring up the numbers here for you. Here, if you have questions, always ask in the chat, and then we can talk about your questions. Do you advise buying SQQQ now? No, of course not. I never advise you to do anything. You always have to do your own due diligence. It is not an investment advice here. Always do and take your own decisions. I cannot be made responsible for your decisions. It's only what I think here. It's just for entertainment purposes what I do here. And you can take on my information and then do your own due diligence and take on your decisions, but you are responsible for your trading. So I don't advise you to do anything, to buy SQQQ or to buy TQQQ. I cannot trade these leverage ETFs. I can only trade futures, but I wouldn't recommend anything before CPI if you are not sure what you are doing or what you want to do and you have your concrete plan what you want to do, then don't do it. And then stay out of any position, wait for the numbers to come, wait for direction, and then trade again. So now CPI here, year over year data is expected to be 6.5%. Previous number was 7.1%. So this is a huge drop here. Let's see how steep this drop is. The previous number was 7.1 and the number before was 7.7%. Don't know why this is now made to whatever this language is. But yeah, we see that the drop here is pretty heavy. So this last time it was 0.6%, and this time the expectation is also 0.6% again between the previous number and the forecast. So let's see if we can see these low numbers. I think the expectation, the forecast is pretty low. Maybe we will be a little bit higher and therefore see a drop in the markets. I don't know, maybe it's just a little bit controversial because we also have core CPI. So this number is without the prices of food and energy. And you know, the prices of energy have dropped a lot in the last months, especially gasoline prices, natural gas prices. And therefore we can see lower than expected prices here in core CPI. So maybe this number will be lower here in CPI than expected, but core CPI without these food prices and gas prices, we will maybe see a higher than expected number. So yeah, it can be controversial and yeah, be in favor of the bulls and the bears, and that, like always, every side now will have something to debate and to say, yeah, it's in our favor, and therefore we will see probably a fight if we see different than expected numbers on the core CPI and the normal CPI. So this will be interesting to see, but you can already see that the core CPI is a little bit lower than the CPI because yeah, the food prices and the electricity price and so on are not included here in core CPI, because you exclude them because you say there's a lot more volatility in these prices for natural gas, gasoline and electricity and food and so on. And therefore we only look at core CPI here. So this number normally has more significance than a CPI, but I will look at both here, so today. And yeah, I normally don't trade the outcome. A lot of people are asking me what is my expectation. I think this number is a little bit low, so maybe we will come in higher here, but maybe a little bit lower here. I don't know, it can be just the opposite. So I don't predict any numbers, I just trade what happens and I trade direction. And you see the direction on a day chart is to the upside, and therefore I think we will go to the upside even more and then see a downturn in the next days or weeks. Initial jobless claims 215k, previous week was 204k. So let's see how this number comes in, but it's just a weekly number, so not really important. And I think that we will still need 2 to 4 more weeks to see higher initial jobless claims here. And then the job market should weaken also, but it will take some time until we will see it in the initial jobless claim numbers. Okay. Everyone is asking for my Discord ID. Yeah, it's Börsenguru. It's the German one. I will just write it in the chat and then you can write me here. And we can talk if you have some questions outside of my streams, but you can also ask the questions below my streams. If you rewatch them, then just write your questions below and I can answer them. Okay, let's go back to the futures and let's start with the VIX. So here with VIX we see we had a little bit higher the VIX number yesterday and we are higher also today, but it's already dropping. But it can go even lower when we have lower than expected CPI numbers, or higher when we have higher than expected CPI numbers. In 4 minutes we will see the outcome, we will see the movement, and then a lot of volatility should go out because we have the numbers. But if it's a lot higher than expected, then we can also see a push in volatility and therefore more fear and more drop in stock markets. I don't expect the VIX to do a lot, but maybe Euro USD will do a lot. Whoops, where's my chart here? We see that we are still pushing to new highs here in the previous months. At 1077 right now, so above previous highs, and when the markets are rising then probably also Euro USD should rise. Less need for a safe haven like US dollar, and then the money should flow back into stock market. But if we see a higher than expected CPI number, then probably stock markets will drop and also the money will flow back into US dollar as safe haven, and therefore Euro USD should drop also. Natural gas prices rising a little bit today, 3.7% right now, but you see overall it's still in a downtrend. We are below the moving averages. Maybe we will see a retest of the $4 level like we did the day before yesterday. No, it was 3 days ago. We were at what was it, $4.12 in at the highest point. Still some room to the upside. Maybe it's just trying to form a bottom here at the $3.50 level. We talked about this, but we can see lower lows at the $3 level. There's the next really strong bottom. Crude oil is interesting because in crude oil we went higher yesterday above the 50% Fibonacci level, and today we are right at the next resistance, 61.8%, as you can see, and trying to push above. So let's see, when the markets are strong, then also crude oil can go higher to the next resistance here at the 80, around 80 or $80.50 should be the next resistance where the previous high points were. This is about how many percentage points? About 2.2% to the upside. 2 minutes left until the news, so don't waste too much time. Let's go back right away to Nasdaq. I want to look at Nasdaq. You can also watch. Yes, still rising. Crazy how the market is going to higher highs here. So 11,530. You see here the 50% Fibonacci level. This is the orange line here. You can see almost touched it. 11,538 points. So maybe we'll touch it right before the news. I will just bring up both tabs here though that we have the news and the chart here. So let's have a 1 minute chart so that we can see a really nice candle when the news are out. Shai, if you cannot message me, then send me a friend request and then you should be able to message me. Or I will write you and then you should be able again to write me a message. We hit the Fibonacci level. Just some seconds left. 10 seconds left for the news to come. Let's see if we see a downturn right at the Fibonacci level. 5 seconds left. 2 seconds. News out. Woo, what a drop. 200 points, 250 points. Crazy, crazy, crazy. CPI is in line. Whoa, in line. And CPI month over month is lower than expected. We had a deflation here. Look at this. Expectation was 0% and we had a deflation on CPI month over month. Core CPI is also in line. Crazy. And the yearly number in line. I've never seen so many inline numbers. Look at this. 3 numbers in line and 1 is lower than expected. So it's good. It's good. It really hit market expectations. So this time analysts made really good forecasts. But yeah, it was just too high right before the numbers. And therefore we saw this drop of 200 points to the downside. And now you see where is the support level? 11,350 next Fibonacci line. Yes, we went below, but we closed above. So that's why I work with Fibonacci levels. They work so good. I have no explanation why. It's just a mathematical thing. But a lot of people use them, especially on higher time frames. And you have seen here, this is a day chart. You can also use it on a week chart. But this is a huge movement here. And therefore it works on the higher time frames. And you can use it on lower time frames like 1 minute or 5 minutes. And it will still work. So now we will probably see a 100% reversal right away. Back to 11,500. Let's see, the numbers weren't bad at all. Fear should go out. VIX should drop. Let's see VIX again. Is it moving right now? Yeah, 2118, so not moving a lot right now. Wait for the next level. Retested moving averages here. And made some resistance, but still moving to higher highs. So it's not weak, it's not looking weak, still looking good. It would be a nice level to take on more longs. You see, it was at 3 hours before the closing, or 4 hours before the closing yesterday. We were at this level here, so we didn't lose a lot here. Even if it's 300 points or 250 points, it's not a lot. It's from the high to the low. What was it? About 2%. Yeah, this was the expectation for the move we discussed yesterday on Discord. The move for the closing today of Nasdaq is, I think it was 2.6% and 2% on the ES or SPX. So let's go back to ES future and see what happened there. So we had about the same movement. And let's see on a 5-minute chart, there was the drop. 4,019.75 points was the high point, and the low point here was 3,954 points. So we lost about 65 points, and now trying to push higher again. Of course, parabolic SAR is now moving to the upside here, because we closed at the lower level on a 5-minute time frame. The same for Nasdaq. We will probably close, not this an hourly candle, we will close below, and therefore it moved to the upside. But we can see a reversal right away because the numbers were in line. That's good. If the market is able to have the right numbers in the forecast, this is a good sign, I think. And yeah, it's still too high. Inflation is too high, a lot too high. The Federal Reserve wants to have a 2% rate of inflation. So it will take time, 1 or 1.5 more years to be in the near of 2% level. But the good thing is that the rate of inflation, the growth, is coming down. The rate is going lower. So we still have high inflation, too high inflation, but the rate growth is going lower, and this is a good sign. Initial jobless claims, still a strong job market, 205k versus 215k expected, so almost about the same number like the previous week. But even if it's a 3-star event, I don't think that it's really important today here, and I wouldn't give a lot here on this number. We have to wait 2-4 more weeks until we really see that initial jobless claims should rise, because this is normally just the last number which will be affected by the higher interest rate levels from the Federal Reserve. At first, the banks have to give the higher interest rates to the customers, so that the companies and the private customers will have to pay more interest fees. We already see this on the housing market, on the building market, and on the car market. But it takes some time until we will see it at the companies, because companies lost a lot of good workers in the COVID crisis 2020, and now they know if they will set free their labor workers, then they will get in trouble if they need it back in the second half of 2023. So therefore they try to keep their stuff as long as they can. But the higher the pressure gets with higher interest rates, the higher the pressure gets on the companies, and therefore they will try to save money. And where can they save money? By lowering wages or by letting go some people, yeah? And that's when we see higher initial jobless claims. But it takes time, 3 to 6 months after the interest rates have risen. Then we will see that initial jobless claims will be higher. So it really takes time. And this is a big problem for the central bank, because they are rising interest rates again next month. So February 1st is the next Federal Reserve meeting. They will probably higher the interest rate again, but they still don't see the effect of the previous interest rate hikes. And this is the big problem, this time gap of 3 to 6 months in between the rate hikes and what will happen on the job market. We already see lower CPI numbers or lower interest, lower numbers here on inflation. This is good. So this is a number which can be seen earlier, but the job market is the last number that is affected, and therefore the Federal Reserve has to wait. But they don't want to overshoot, and I think they will probably overshoot. With 5% interest rate level, they will set the interest rate too high, and they will probably have to lower it at the end of this year. Maybe between October and December, we will see that we will have again a lower interest rate. And we had a 100% reversal while I was talking here. We were going back these 150 or 250 points. Crazy. Yeah, look at this. 250 points in less than 10 minutes. How crazy is this? Yeah, would have been a good point to take on more longs. So now we closed the gap here, and pulling back again. But I still think these are strong numbers, because inline is strong, because everyone was in fear that the numbers would come in higher. But they are not higher at all. So they are like the expected numbers, and CPI month over month even lower than expected. This is good. This is a good sign. This is perfect, I think. And yeah, we don't have to rise, of course, but 11,500 is a nice level. We are at the Fibonacci level, so this should be a first resistance level. Everything is working like intended here, and we can possibly see tomorrow or maybe today push us higher here to the next level here. This is what I want to see, and there I will close some of my longs again, and yeah, prepare for a turn. Maybe here the red level at what is it, 11,958 points. So this could possibly be our turning point right below the 12,000 level. Let's see where the point of max pain will be, but I think that we will still see some more higher levels before we see a downturn, and all the people who went in short too early are now pushed out, and they will have to close their short positions with losses. Yeah, jobless claims is not good, is saying Ron. Yes, of course, it's not as good as expected, but it's a weekly number. So this is a monthly number. So this is different because we see this number just one time a month. But initial jobless claims we see every week. Every Thursday is initial jobless claim. So, and you see the previous weeks were all above the forecast. So it's not below the forecast, and therefore better than expected for the job market, but worse for the stock market. But it's not really important, even if it's a 3-star event. So this had nothing to say. You see the forecast was even lower than the previous weeks, and it was the same number as the previous week. So yeah, the difference between the forecast and the actual number is lower than in the previous week, and therefore I don't think that it has to say a lot. The inflation number is the more important one today. The CPI number is more important. yeah, let's see the important numbers for the next day. So tomorrow is nothing, I think, in the US, nothing important. Yes, we have the export and import price index, Tuesday events, 1 hour before the market opens, and a Fed's speech from member Harker. But I don't think that this is really, really important. So more important will be probably next week. Let's have a look at next week. Next week we will see where are the 3-star events. Again, the speech of Fed Chair Jerome Powell on Tuesday at 9 a.m., half an hour before the market opens. And we will have crude oil inventories like every week, and nothing important here. No, sorry, this is this week. Next week I was wrong. Jerome Powell is not speaking again. We had this week. We will have for the US nothing on Monday. Yes, it's a holiday Monday. So Martin Luther King Day is a holiday. So stock market is closed in the US. It's open in Germany and the European Union, but for US traders it will be closed. So free day also for me because I'm mainly trading US market. New York Empire State Manufacturing Index, yes, but only Tuesday went. And here more important PPI numbers. So more inflation numbers. After CPI we see PPI. PPI is next week Wednesday, 1 hour before the market opens. And here we see the number is the expected number is 0.2%, and core number is even negative. So we will see probably a deflation here in core retail sales. So you see that the merchants have to lower the prices to be able to sell their stuff. And that's a big problem, because then the market will maybe fear at some point the worse than expected recession. And this is what we can see in the numbers of PPI, producer price inflation, because this number comes even before CPI. Before the consumers see the higher prices, the producers will see the higher prices. And that's also a big thing, what will be important in the next months. Retail sales, of course, important, and you see also expected lower numbers. So yeah, all the numbers are going to a recession here. Building permits will be interesting next week on Thursday. Philadelphia Fed Manufacturing Index. Yeah, and that's it. Existing home sales on Friday. So the most important data is published on Wednesday with CPI, I think, and then some housing numbers on Thursday and Friday. But Wednesday will be the most important day next week with PPI. Okay, let's go again to a 5-minute time frame and see all the other stuff we have here. While the market is moving sideways here, maybe we will need some more volume and the stock market to open to see a push higher, maybe a retest of the lows here, and then see the same movement and push higher. I can imagine that we will see higher levels today because numbers were in line. I think it's a good sign. It's a good sign here. But yeah, it's nice to see that this was a first resistance and that the Fibonacci levels are working so fine. And yeah, that's why I use them. That's the reason I use them, because they really work fine here, especially in NASDAQ where I use it. But also on ES the same. So here you can also see that on a daily basis we are still below this number. We were pushing already above the 50 Fibonacci level, but on a day chart we are still above. So let's see where we close today. But the 4,000 points level is a psychological important one. High point was 4,019.75 for ES future today. Okay, let's go on with the single stocks. Pre-market Tesla is down 0.5%. So it's interesting to see that even if NASDAQ was moving, that Tesla is not moving really a lot here. Only 0.4% down right now. Then we have Amazon. Amazon, not on a week chart. Let's see on a 15-minute time frame. It's just at the closing level of yesterday. So it went higher to $97, pushing back to $95 right now. And this is one of the heavyweights together with Apple and Microsoft. Where do I have the charts here? Did I close them? Yes, I think I closed them. I have Meta here. Meta is down 0.2% right now, just trading sideways. Let's see it. Yeah, just trading sideways, 0.3% down today. Let's go to Apple and Microsoft. So for Apple, it's down 0.2% or the same. And Microsoft, this one is the stock with the heaviest weight in Nasdaq and in S&P 500. So I've seen a video today where the guy was talking that Apple is the stock with the heaviest weight, but no, it's Microsoft. Of course, Apple has a higher higher valued, but Microsoft has the higher weighting in the index because of the free float. There's more free float of Microsoft, and therefore the weighting of Microsoft is higher than the one of Apple. So Microsoft is down 0.3%, but we had good news the previous days because Microsoft wants to invest more than 1 billion into ChatGPT. If you haven't used it, then try it out. It's really interesting. It has some limitations, but you can go around them. It's really interesting to see what this artificial intelligence AI is producing. Yeah, I don't know what I should expect from it because it's in an early stage, but I think that we will see a lot more AI things, especially for web searchers, but also for producing content like maybe videos, PowerPoints, poems, or whatever, just blog articles, and therefore it will be important. And this could be an important thing for Microsoft to invest here more money and to gain some percentage points against Google, because Google has still 90% of the search market, and Microsoft with its Bing search engine has only about, I think, 3%, so it's pretty nothing, and 7% for the rest. So it's a monopoly for Google, and maybe this software ChatGPT can break up this monopoly. But Google is working hard. Let's see Google. Google is working hard for not being taken out of business. It happened with Nokia, because Nokia didn't produce smartphones 15 years, and then the Apple came around the corner with its iPhone, and this was the biggest issue for Nokia, and then they went down, went almost bankrupt, sold all their business to Microsoft. Microsoft wasn't able to have a good system for smartphones with their Windows 7. And then they gave it up, and it was a useless investment. And the same happened to Kodak with their digital photography. So they missed out on digital photography, and therefore they went bankrupt. So yeah, it can happen to the biggest companies, which have the biggest monopolies. If they are too lazy, then they will lose their business. And that's what Google has to fight here, for not losing their business to this new artificial intelligence. But yeah, the last 2 days are looking good, pushing above the previous highs. Then we could possibly see a turn of direction here to the upside again if we can close the week green here. Nasdaq still sideways trading, nothing interesting here. But I'm happy that the numbers were in line and that I hold my position. Yes, I could have sold it right here, but we could also have seen lower than expected numbers, because you see they were in line, so we could have had just a little bit lower than expected numbers, and then the market could have pushed to the upside 200 points. And therefore I'm happy that I just stayed into my trade, because it was a light position, and it's not a big thing for me to have a light position, even if we go higher or lower by 200 or 250 points. Yeah, so therefore happy. Yeah, it would have been better in the look back. It would have been better to sell everything here and to buy everything back here. But yeah, who catches the high and the low points? Almost no one. And therefore, just happy that I stayed in my trade. And I didn't make money, but I also didn't lose money. Okay. Nick sold SQQQ. Okay, yeah, hope you made some money, or you just didn't trade it and just watched it. It's interesting to see, because we haven't seen in the previous months these inline numbers. So if we go back to the previous, numbers, we haven't seen inline numbers here. So we always had higher or lower than expected numbers. This is the first month for the last, we see in last March last year, we had a number like the forecast. But it's really rare to hit the forecast, and therefore nice to see that we had this on core CPI and on normal CPI the same number as the forecast. Still strong, market doesn't want to pull back again. So this is nice to see, and probably we will retest the high points here and then see higher levels. Let's see if we can see some other levels here. It's difficult to see on a 4 hour because we weren't at these higher levels here. But what you could also do is use Fibonacci extensions. So you could use the previous day if you just want to have an extension for the day today, or you could use it with a stronger movement, like here the low point of last Friday and the high point of today. You could use this and say, okay, let me show Fibonacci extension and then see where we can go to. So from the low point to the high point, and then see on a higher time frame like a day chart, see where are the important extensions. So for example, here is one Fibonacci extension, the 61.8%, or you see 161.8% extension to the upside. This is also an important level. So we can push up to the 12,000 or 12,000, what is it, 12,046 points level. And you see, this was a previous high point. How crazy is this? It was almost a previous high point. 12,069.5 points was a previous high point. So yes, we have more potential, more room to the upside, but I want to play it safe, and therefore I will be out at this Fibonacci level here, 61.8%, and then just wait for the market to find direction. It can break out, I can be completely wrong, we won't see a bear market again, and that's it. This were the lows of the year, but I don't know. I still think that Jerome Powell is wrong, and that we will see lower interest rates again at the end of the year, and a worse than expected recession and not a soft landing of the economy. And therefore stock market will have to take this into account in the next month, and we will probably see this in Q3 or Q4 in the economic data. But because we are trading the future here at stock exchanges, we will probably see it at the end of the first quarter and beginning of the second quarter. We will probably see the downturn of the stock market. This is what my own expectation is. Bullard will speak, but Bullard is not a member who is able to vote. Therefore, it's not important. It was important last year that Bullard spoke, but Bullard is not one of the voting members anymore this year, and therefore I don't care what Bullard is saying. He's really dovish. Last week, I think it was last week, he spoke really dovish. It's completely the opposite from last year where he spoke hawkish. So I don't care about what he is saying at all, because he is not one of the voting members anymore. Okay. Do you have some more questions? I will be live until the full hour here, and then I can close out the live stream here. Let's move on with the other commodities. We haven't talked about sugar right now. Sugar went higher than I expected it. I thought that we will only see a small pullback here. I didn't try it, but I'm still waiting for the downturn again. So we went even above the 50 Fibonacci level yesterday. I have to redraw it because I see that I haven't caught the right low points and high points here. So this is the correct low and high point, and you see how good it fits again. 50% Fibonacci level. So we hit it right at the important psychological round mark here, 0.2. Then we went back, closed even below the next Fibonacci level, and we are forming a first red candle here. Let's see when we can go lower. I will maybe open the first small short position with one contract short, but I want to go in, as we talked about this last week, I want to go in with more contracts as soon as we go below this level here for lower levels of sugar. This is interesting, I think, to trade it to the downside here. What else is interesting to watch? Orange juice is still not interesting. I still have it on my watch list, but we are still in this triangle here. So let's see if we can break out to the upside or to the downside in the next week. Probably, yeah, in the next week I think that we will see the outbreak here above this high point here, or maybe above the low points here, and then we will see probably more movement here in orange juice. We're on the interesting points for crude oil. Crude oil is moving higher. We talked about this before CPI came out, because markets now are stable, then crude oil can also rise higher. And yeah, next level is above the $80 level. The closings here of $80.20, 25 maybe. So this should be the next target. There's still some room to the upside. Let's see if we will have a third time this high point, or if we can break above this time. But on a first attempt, probably it will be, especially on a strong push, it will be a resistance level. Euro USD is pushing higher as expected, because the market is strong. Yes, I have a small short position for my portfolio size, just a small hedge for my Nasdaq futures, and yeah, just waiting here. I can still earn interest by being short euro and being long US dollar, because there's a huge gap between euro interest and US dollar interest, about 1.5% interest points, and therefore I like to be short here just to earn some more interest. And maybe we will see a downturn here. I talked about it when the stock market is pulling back, when we see a worsening of a recession, then we will probably see lower numbers here, lower numbers on Euro USD, because the money will flow back into US dollar, and we will see a weakening of euro and be a stronger US dollar. And yeah, this is what I'm betting on, but with a light position here for my portfolio size. Okay, yeah, I've gone through all my interesting commodities. Back to Tesla. Tesla still trading sideways, nothing interesting here. We will probably have to wait for market open to see more direction here. Wow, we retested the highs already. Double top now. And you see, whatever you use, if you use the Fibonacci extension, I've drawn both together now from the low point of last Friday, or if you use to the high point of today, or if you use this time frame here from the high point of December 13th to the low point here, whatever Fibonacci level you use, you see how near these two levels are. So a lot of traders, of course, look at these levels because they draw their Fibonacci lines, and even if they just look at the plain chart, they see the low point here. So this is a resistance level, of course, and it takes its time to push above. Like we had here, this was a previous resistance, as you can see. We pulled back strong, but the next day we tried to push back, and then yesterday we managed to go above. So a lot of these resistance level needs 2 attempts to go above, or the support levels to go below. That's just normal. Still pushing, still looking strong. Yeah, DXY is going down, Nick. Yes, we talked about this. I'm just watching Euro USD because I have a position there, but because it reflects 60% of the traded volume on Forex markets, you can also watch Euro USD, and it reflects almost the DXY, the US dollar index. So US dollar is weakening because the markets go up to the upside, and there's less fear, less need for a safe haven, and money is flowing out of the high interest in the US dollar back into the riskier assets like stocks. 1 minute until the full hour, then we can probably see more pushes. 45 seconds left. Let's see the hourly candle here. And you see this strong candle. This implicates now more push to the upside, because look at this wick. We traded to the downside here and went back up all the way. So this is a strong candle now. This is what we call a hammer now. And it looks pretty good, this hammer. So let's see if we can even close here right at the resistance level or right above. 15 seconds left to close this hourly candle. And in half an hour the market will open. So this is still pre-market here. 5 seconds left. And the candle closes right in the zone, but a nice hammer candle. Yeah, we should probably see more push to the upside. This is strong. The market is strong. Yeah, you have seen the movements, these 250 points to the up and down side. So this is a strong movement, and yeah, market is strong today. So don't try to fight the trend. Of course, we can still see pushes down for market open, and that some people will take out their profits because we are still in this resistance area and at the resistance point here. But I think the market is so strong the previous days and today that we will probably hit the next Fibonacci level. And again, the next Fibonacci level for Nasdaq is this one here, where we had the low point 11,728. There I will leave some of my longs, and for ES future the point will be here, the closing level, which was at 4,030 points. So this is the next Fibonacci level you should prepare for. This is only 15 points away right now, so not far away. So we will possibly reach it today. What do you think of Euro USD short? Yeah, I'm already short, Dylan, but it is a hedge for my Nasdaq long trade. So I don't expect it to make money in the next days. It's just a small short position of 130k here. So as long as the markets are pulling to the upside, Euro USD will pull to the upside. Maybe we'll see the 110 level before we see a trend down, but I can still go in more short here. As soon as I have closed out my Nasdaq shorts, I will possibly go in more with a short here. If we go to a higher time frame, we are now above the previous high points, so above the resistance level. And on a monthly chart, you see now we have some room to the upside. 110 is a more psychological level, and next Fibonacci level here is 114.7, so about 115. And you see these were previous high points as well, so this should be a stronger resistance here. I don't know how far we can pull up now, but it's looking more bullish than bearish, as you can see, and therefore I won't short more right now. I will just wait, and as soon as I'm out of my Nasdaq long futures, I will possibly, as soon as the market is coming down again and we will see a worse than expected recession, then the US dollar should getting stronger again, and I will take on more shorts here on Euro USD. You could do the same with DXY, just go long on DXY if you want to trade the US dollar index, but I mainly trade the Forex, the money itself here, the Forex pair. That's easier for me, and yeah, that's what I have right now. But always do your own due diligence. It's just my own opinion. It's what I trade, and you see that everything is connected to each other. So this is the market is globalized. So we see that the bond market, the stock market, the Forex market, everything is connected, and you just have to know what effects are together. So which market affect the others, and that is what you should learn here from my streams. That's why I talk about all these topics about Japanese yen. We talked about Japanese yen and the carry traders. So let's have a look again on the Japanese yen, US dollar Japanese yen. So you see it's pulling down, yeah, because now we see again that money is pulling out of US dollar and Japanese yen. Yeah, we have to wait. We have to wait here. I'm still waiting for my shoulder, head, shoulder. We talked about this. So the week isn't over yet. We can still close above and see my second shoulder here. So I will try to prepare for this trade for next week, for the second shoulder here, to go to higher levels. And this is about 6% upside potential, I think, from this level here for forming a second shoulder. And this is a higher time frame on a week chart here. Therefore, there is more potential to see this. If the market makes a downturn again, then we will possibly see a stronger US dollar, a weaker Japanese yen. And yeah, let's see how it comes out the next week. We still have some time. but the forex markets are really in good trends, so you can see the trends really good, especially on a high time frame like here on a week chart. Okay, hope you could learn something today. Thank you for watching. Wish you a nice trading day, and we will see us next week for the next important news. And if you haven't done so far, please subscribe to my channel, click the bell to be notified every time I go live. And if you want to write me a question, then just write it below my stream and I will answer it right away. Have a nice trading day, have a nice rest of the week. We see us next week. Goodbye.